So going over a sales type lease with selling profit, this is basically a situation when you are talking about a sales type lease, and as the lease occurs, we have an example here with a selling profit. They're selling equipment that is the lease value, as we said before, $479,079, but the equipment costs basically $300,000. So if it's a sale type lease and you substantially transferred the value of the property, shouldn't you recognize revenue in the same amount? Right. So when you recognize revenue for that $479,079, you also have to recognize the cost, right? So in this situation, given that you're leasing the equipment out, right, but it's a sales type lease, you're going to say, hey, I have sales revenue for $479,079 and cost of goods sold for $300,000, right? And then you still have a lease receivable, and then you have to credit the equipment for the cost. And then you obviously, the profit will record itself through the income statement computations in the amount of $179,079. And then first lease payment comes and you have cash and lease receivable. So essentially it's kind of like you're going through the motions of saying this is a note receivable that essentially embeds in itself revenue, cost, and profit. And is basically saying that we have a profit that is being recognized, and there's no other way of looking at it, right? Now, looking further at operating leases, okay, doesn't meet any of the criteria for a finance lease. Fundamental rights and responsibilities of ownerships are retained by the lessor. Lessee merely uses the asset temporarily. A sale is not recorded by the lessor. Lessee records the right of use asset and lease payable at commencement based on present value of lease payments. Lease payable is considered a non-debt liability. So these are the primary differences between a sales type lease and the operating lease. That's really the core of the chapter. So let's go over a few more questions. A sale type lease is reported in the lessor's balance sheet as an asset. So the lessor is essentially considers this lease as if you issue somebody a loan. You as the issuer of the loan record that loan receivable as an asset. A lease, you're essentially same thing. Lease is a loan receivable asset. Recording a sales type lease with a selling profit is similar to recording a sale of merchandise on account. It's basically exactly, they haven't paid you yet, they're going to pay you later. A note receivable, that's exactly what it is, a note receivable, a sale of merchandise on account. The appropriate asset value reported in the balance sheet by the lessee of an operating lease is, for the lessee, it's the present value of the lease payments, right? So that is basically the appropriate asset value reported in the balance sheet by the lessee of an operating lease, the present value of lease payments. Because they actually have that asset now, so you have an asset for the present value of future lease payments, because that is essentially what your obligation is, and in the meantime you have an asset to show. Advance payments made by the lessee on an operating lease are considered to be deferred revenue to the lessor, right? So if advance payments are made by, so for example, if you prepay your rent, right, you're the lessee. The lessor is recording deferred revenue. Why? Because they haven't earned that revenue because it's happened in advance. So they would earn it as the period would go by for when that payment was actually due. So that is the summary essentially of this chapter. We've gone through a difference between the operating lease and the sales type lease and the related journal entries and example questions.